Good afternoon, everyone. This is Charles Rader again, managing partner at Amlaw Group. Question we often get: can I use a loan to invest in the EB-5 program and get my green card that way? And you might be surprised to hear that the answer is, in fact, yes. And there's actually several different ways you could structure a loan. And each way has, complications and advantages, and that has to be analyzed by your immigration attorney. So if you find this information helpful to you, please put a like below in the description, and even maybe better yet, sign up for our channel, because by signing up, you not only help our Google algorithms and get promoted more, but you help yourself, because you're not going to miss any of our new material as we put it out there, since we are one of the leading sources, I would say, for business immigration to the US. So getting back to the question for today, using a loan. There's probably three types of loans that are most commonly used in this context. You could get a loan from your company, if you have one. You could get a loan from your friends or family, or you could get a loan from a bank. Now, maybe not so surprisingly, getting a loan from your friends and family is a little bit more difficult, and getting it from your company is even more difficult. So in terms of complexity, we'll start with the most difficult options and then work our way towards the easier ones. Most difficult, I would say, is getting a loan from your company. Why is that? Because generally, the documents you'd have to provide if you got a loan from your company is equal to, or probably even more than if you were just to pay yourself a dividend from the company. But sometimes, for tax reasons generally, our clients don't want to pay themselves a dividends, or don't want to take capital gains on the sale of any shares of their company. Therefore, it's better for them to just structure it as a loan, which is fine, but you have to provide a lot of documentation. And in any case, you still have to then provide documentation where you got the money to start up your company, or where you got it to buy the shares in the company that you have. And so you still have to go through that entire analysis that you would as if you had sold the company or taken dividends. So in that regards, a company loan isn't any easier from an EB-5 perspective. It's maybe better from a tax perspective for the client, but from an EB-5 perspective, I think it's actually a little bit more burdensome. Second most difficult option is a loan from your friends or your family. Now, why would you do that? The reason this option is used is if the investor himself can't provide clear documentation about the source of funds for the money he's going to invest, but he has a friend who has maybe a really clean history. His friend, made $250,000 for the last 4 years, didn't spend much of it, just put it in his bank account, and it's pretty straightforward. So the lender, your friend or family member, is going to have to prove where she got the money from. But assuming she's got a pretty straightforward history, then in that case, it could really be a little bit easier than you having to prove it. So again, it really depends on the financial situation and the documentation that your friends have. And actually, it depends on your relationship with them, because sometimes we've seen where friends are initially totally open to helping out their friends, but when they find out they've got to provide us tax returns for the last 7 years and a lot of financial details that maybe they've even hid from their spouses all this time, sometimes it can create some problems. And the next option, which is last but not least, but is certainly the easiest in most cases, is a bank loan. Why is that? Well, because a bank is in the business of lending money. So the US government is never going to challenge, gee, where did that bank get the money to offer you a loan? They understand completely that this is part of their everyday business, and so you don't have to prove anything as to where the bank got its money to lend to you. Now, where it can be difficult depends on the type of bank loan you get. Probably the most common bank loan is a collateralized bank loan, or one that has security. But the problem for EB-5s is with a secured loan, that means you're providing some collateral. And the US government is going to want to know, where did you get the money to buy that collateral, which you're pledging against this loan? So in some ways, it's really not even any better. So the client might say, well, yeah, I have a house, I can get a mortgage on the house, but I can't prove where I got the money to buy the house. Well, okay, you could get a second mortgage on the house and use that to invest in EB-5, but you're still going to have to prove where you got the money to buy the house. So a lot of times it's kind of like a catch-22. You just go in a circle. And it doesn't really help anything. So in the case of a bank loan, the vast majority of cases that we do and what we recommend to our clients is to get an unsecured bank loan. Now, it's true that banks generally don't like giving loans without security, but most of our clients are relatively well off and generally have pretty good banking relationships with their banks. They're not investing their last $1 million, and they usually have a couple more million, if not dozens of millions, besides what they're putting into the EB-5 program. So if you have a good relationship with your bank, you can come up with some kind of terms whereby they're willing to give you a loan without collateral, then that is probably the easiest option you could ever have for investing in EB-5 program. So again, loans are very popular and becoming increasingly popular, especially for people coming from emerging markets where there's some maybe problems either with taxation, currency conversion, and other things. That bank loans, I think, are increasingly popular, and rightfully so. If you found this information helpful, again, please leave a like or send in any comments in the commentary that you might have or questions, or better yet, sign up for a consultation and we'll be happy to help you out. Until next time, this was Charles Rader.